Ladies and gentlemen, good day and welcome to H2 and FY26 results conference call of Rikhav Securities Limited, hosted by Green Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Parth Acharya from Green Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Green Advisors, I welcome you all to the conference call of Rikhav Securities Limited. From the management team, we have Mr. Hitesh Lakhani, Chairman and Managing Director, Mr. Rajendra Shah, Full-Time Director and CFO, and Mr. Deep Lakhani, Head of Technology. With that, now hand over the call to Mr. Hitesh Lakhani for the opening remarks. Over to you, sir. Thank you.
Hi. Good evening, everyone, and welcome to the H2 FY26 earnings conference call of Rikhav Securities Limited. On behalf of management team, I would like to thank all our investor, analysts, shareholders, and participants for joining us today. We sincerely appreciate your continued trust and support towards Rikhav Securities Limited. Over the years, we have built Rikhav Securities into diversified technology-driven financial services platform with capabilities across equity broking, derivatives trading, commodities broking, market making, proprietary trading, margin funding, clearing services, and depository operations. Our journey has been driven by disciplined execution, strong market understanding, technology integration, and continuous focus on building long-term relationships with the capital market ecosystem. At Rikhav Securities, we provide comprehensive range of financial and capital market services catering to retail investors, HNI, and institutional participants. Our offering includes equity broking, future and options, derivatives trading, commodity broking, margin trading facility, market making services, depository services, IPO application support, and distribution of mutual funds. Through our integrated and technology-enabled platform, we aim to provide clients with seamless execution of capabilities, efficient onboarding, and diversified investment solutions. Our business model today is supported by multiple revenue streams across broking, proprietary trading, arbitrage strategies, market making activities, financial solutions, and capital market services. Alongside our broking operation, we have also developed strong expertise in proprietary trading through algorithm-driven arbitrage, delta hedging, and structured short-term trading opportunities backed by automated risk management system. One of our key strengths continues to be our robust technology infrastructure. We operate through a low latency and high efficient trading ecosystem supported by strong backed architecture and automated monitoring system. Our risk management framework is largely algorithm and VAR-based, helping us optimize risk-adjusted returns while reducing operational vulnerabilities and manual intervention. Another important pillars of our business is our market making capabilities across both BSE and NSE platform, where we continue to support liquidity creation and participation across the SME capital markets ecosystem. This has enabled us to establish strong relationships across issuer, intermediaries, investors, and broader financial ecosystem. At the same time, we continue to strengthen our client offering through unified financial services ecosystem that combine technology, execution efficiency, and customer-centric service capabilities. Our digital first onboarding infrastructure, Aadhaar-enabled e-KYC system, and mobile trading platform continue to improve accessibility, client experience, and operational efficiency. From an industry perspective, FY26 remained a relatively challenging and volatile year for the broking and capital market industries, despite the long-term structural growth opportunities for financialization in India. During the year, the industry witnessed phases of heightened volatility, moderation in retail cash market participation, tighter liquidity condition, and pressure on trading activity across several segments of the market. At the same time, increasing competition, higher technology and compliance cost, evolving regulatory framework, and changing investor participation trends continue to impact profitability across several broking business. Proprietary trading performance across the industry was also impacted during certain period due to volatile market movements and rapid shift of trading patterns. However, despite the near-term industry challenge, we continue to remain positive on the long-term outlook of the India's capital market ecosystem. Increasing retail participation, rising penetration of digital investing platform, growth in SME fundraising activities, expansion in financial savings, and growing institutional participation continue to create strong structural opportunities for organized and technology-focused financial services players. Against this backdrop, we continue to focus on strengthening our long-term operating foundation, technology capabilities, and risk management system during FY26. Coming to our financial performance for H2 FY26, we reported total income of 1,604 crore, EBITDA of 6.57 crore, and PAT of 1.20 crores with earning per share is 0.31. FY26, we reported total income of 1,991 crore, EBITDA 32.53 crores, and profit after tax of 18.96 crores with earning per share of 4.95. During FY26, we continue to strengthen our technology and operational infrastructure through investment of approximately 5.40 crores towards computer software system and technology enhancement initiative. While thus investment resulted in higher depreciation expenses during the year, they have significantly strengthened our operational scalability, back-end efficiency, and technology capabilities for long-term growth. Profitability during the year was impacted by loss from cash market shares of all the investment to the amounting to rupees around 20 to 23 crores, and volatile market condition witnessed during certain periods of the year. Additionally, unrealized profit of 4.33 crores from SLBM transaction has not been recognized in financial statement and is expected to realize in the coming quarters. Looking ahead, our focus remains on building a more scalable, diversified, and technology-led financial services platform. We intend to gradually reallocate capital towards higher efficiency opportunities across proprietary trading, brokerage services, and margin trading facilities, while continuing to optimize our overall risk-return profile. We also see strong opportunities in institutional business development, and we are actively working towards strengthening our institutional brokerage presence through empanelment with banks, FDIs, FPIs, and other institutional participation. We are also started market making of ETF with Kotak Mutual Fund, and we plan to start with another 2 or 3 mutual funds. In parallel, we continue to invest in quantitative trading capabilities, back-end automation, research system, and technology infrastructure to improve execution efficiency and strengthen operational scalability across the organization. Geographically, we are also working towards expanding beyond our core markets of Maharashtra and Gujarat through digital channel, franchise partnership, and sub-broker network to strengthen our retail and high net worth investor reach across the India. Like we have just started our branch at Lucknow, Nasik, and Gorakhpur. Overall, while FY26 witnessed challenging market condition and industry-wide volatility, we believe the investment we are making today in technology, infrastructure, automation, and business diversification position us strongly for long-term sustainable growth. With that, I would now like to open the floor for question and answer. Thank you once again for joining us today.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Avik Bhattacharya from Smiths Limited. Please go ahead.
Hello, sir. Good afternoon. So I have a question regarding the profitability. So the profitability has declined recently. What are the key factors behind the pressure on PAT and margins during the period?
There are basically what the investment made in cash market 1.5 year before. From that said, we booked the loss to the around of 18 to 20 crores. And there is a unrealized profit of around 4.5 crores on the value SLBM segment, which will realize on April. Mainly two reasons is there, and small is the depreciation is around more 30 lakhs more, and somewhat tax adjustment it is about 75 to 80 lakhs.
Mm-hmm. Okay.
And we have nowadays we have reduced also the investment in the shares to the extent of 50 crores, and we planning to reduce investment in shares another 50 crores. Means we will invest in stock market, means in the cash market, not more than 50 crores from this year.
Okay.
So we stabilize the income.
Mm-hmm. Mm-hmm. So there also appears to be a change in the revenue recognition, right? And the presentation methodology in the financial statement. What exactly changed in the accounting treatment, and how should investors compare the
accounting treatment is, I think so, we have changed in March 25 only. So now there is not much anything impact for the accounting treatment. It is a valuation loss that we invested in shares, because on 31st March, all the markets is on the lower side. So there is a valuation loss only.
Yeah, no, but my question was that how should investors compare the current financial performance with the previous period, since the financial, there is a different representation or presentation methodology in the financial statement.
It is the same accounting system. Which policy you don't understand? In last year also we have taken the valuation of stock on cost or market value, whichever is lower. This year also we have.
I was speaking about the jump in revenue, to be precise.
Jumping revenue?
Yeah, jump in revenue. So
it is a turnover. It is only turnover of the stock that was increased.
Okay. So I have another question. There has been a situation where SME inventory became difficult to liquidate because of weak post-listing liquidity. So what were your steps there?
So that's why we have reduced the exposure in SME segment. No? We have reduced very considerably. We reduced the exposure.
Mm-hmm. So what is the current percentage in SME right now?
Compared to last year, it is 30% only.
Okay. Okay. And what that should be converted, like if I convert it
And also that we are not investing in long term, means we will sell the whole stock within 1 week of the listing. We have changed the strategy. That's why our stock is lower compared to last year.
Okay. So the like 30%, what should be in the amount value?
It is around 20 to 25 crores.
Okay. 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 So, so does tighter like SEBI scrutiny and challenging or changing retail sentiment create structural risk for SME IPAC system or over the medium term?
Mm, There is a always means जो सेबी सिस्टम है वो है इट इज ऑलवेज इन्वेस्टर फ्रेंडली और चेंज होती है तो वो हिसाब से वी हैव टू स्ट्रक्चर एंड वी हैव टू एडजस्ट adapt the things. There is no problem. But the market scenario on 31st March due to this US-Iran war is in a lowest, I think so, Nifty is below 23,000. That's why our result is affected minimum 8 to 10 crores because of the valuation.
Okay. So, like, what are the internal filters that are used before accepting SME market, making mandates in terms of promoter quality, merchant banker, credibility?
That we are asserting, but the market condition is such that even good company doesn't have the returns just now. So we have reduced the exposure. There is no alternative, no?
Okay. So I have question like the commodity prices were like up last year, even due to all the tariff and everything. So
We have made the arbitrage means profit in a commodity market to the around 12 crores gross profit in commodity market in arbitrage. So we have started the arbitrage and trading in the commodity market also.
Okay. 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 And one last question. Sorry for taking so much time. So
No.
what does the like current institutional client onboarding pipeline looks like?
We have just onboard the Kotak Mutual Fund, Bank of India, and RBL Bank, and the few FPI, around 8 to 10 FPIs we have started. And from this year we have also started our research division, and so we expect to empanel with the SBI, LIC and big institution.
Okay. Okay. Understood. Thank you and best of luck.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all, please press star 1 to ask any questions. We have next question from Mr. Raj Shah from Shah Ventures. Please go ahead.
Yeah. Hi. Good evening, sir. So I have some couple of doubts. So, what has been the cumulative investment made towards technology infrastructure over the last 2 years?
It is around 7.5 crores to 9 crores. I don't know exact figure, but it's more than 7.5 crores to, it is between 7.5 to 10 crores.
Okay. And could you also explain like what is the proportion of the technology stack is internally developed versus outsourced through third-party vendors?
1 minute. Deep will answer.
So given this, basically it is kind of divided into third-party vendors and internal hardware solutions. So we have an in-house team that works towards automation of our research our solutions towards, let's say, any of the reports that are needed for compliances and basic audit work that goes through. Secondly, I guess somewhere around, let's say, 30 to 40% of it is included in this. Almost, I guess, 50% around goes in basically our third-party vendors, which is our front office and this. And the next very big headache that we have got this time is acquiring hardware like servers and as such to upgrade our systems to enable low frequency and low latency trades. So that is it. Another, like, other than this, we have also upgraded our front office and we have also started algo trading as an in-house venture.
Okay, that's great. And can you also elaborate on company's overall cybersecurity framework, like which includes including how frequently audits and vulnerability assessments are conducted, the key areas covered during this assessment, like and the measures also implemented to address, identify risk and strengthen platform security over time?
So given this, I would say it is a very large topic out, but then I'll give you a basic outlook towards it. So our infrastructure is divided into two networks in itself. The whole arbitrage desk works as an internal official network, which is not exposed to any network outside my office premises. So anyone needs to access it has to come in physically and have his credentials through. The trading platform that is exposed to our clients out, which is back office and front office, that is accessed through an open network out. But those endpoints we cover through a basic audit that happens monthly towards our system, where we take all the necessary end of life descriptions and everything out for each OS that we manage. And then hardware solutions have their capabilities that we pick a fail-safe for each of the hardware that is compromised. So we have a fail-safe for a front office system. Let's say the hardware crashes due to some or the odd reason out. Then we have a secondary backup system which will go live in 5 to 10 minutes out, and we could place the orders as it is. It will continue. Given this, let's say an internal attack happens and due to some foreseen reasons, the data is compromised. We have a backup that is running off the shelf server. So those servers are not exposed to any network outside our premises. So those we could directly internalize and back it up and make it like online within an hour. So that way we are secure enough that we could manage the whole service out. Against the audit thing that you mentioned at the start, SEBI has given certain frameworks that we audit through. Other than that, we have a third-party listed entity that is looking into the whole matter itself, giving us priority review through it. And we are planning to develop a audit system through all the new, so you must have heard about the Mythos AI that is coming through. That is not yet given to us by the official Indian government, but we are planning to implement it no matter like if they give it to us or not. We'll look through it and audit our systems through the whole thing.
Okay. Okay. And is there been any attempted cybersecurity breaches and like operational disruptions or
None this year.
Okay. And what is the current active client base? How many new clients were added during the quarter?
So current active base is
Currently, active base is around 12,500 clients, which means all plus 2,500 clients is added in this half year.
Okay. And what is the current average ARPU and how was the ARPU trended over the last few quarters across retail, HNI and institutional clients?
Means revenue per client.
Yes, revenue per user, right?
Per user, we calculate and Around, I think so, 5 to 6,000 rupees.
Okay. And
But in the same thing, actually, if you know, 50% revenue is from this 5 to 6,000 is the amount of brokerage we have earned, but the float income also, it is more than the brokerage.
okay.
We have around 100 to 120 crores float of the client.
Okay. And also, can you tell me the trend over the last few quarters as well for for each segment, like for retail, HNI, and institutional clients?
Mm. Institutional is just we have empaneled and we have just started, and this year also, most of the part we will our time goes on for the impaling the institution, good institution. The real revenue will start from the next year.
Okay.
And retail and HNI also, there is a slack in the market, so it's very difficult to improve the brokerage in the last 6 months.
Okay.
Only our in-house algo trading and arbitrage activities, this was improved because it is in our hand. But the participation of the HNI in retail is improved only if the market will improve.
Okay. Got it, sir. Got it. Yes. That's all from my side, sir. Thank you.
Yes.
Thank you. Participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from Vidhi Purohit from Phoenix Capital. Please go ahead.
Hello.
Yes,
Yeah.
you are audible. Yes.
Hi, sir. What is the roadmap is being followed for AI-led analytics, fraud detection, client engagement, and automated advisory capabilities?
So given the AI based automation and this thing, we have started it, but we have started it in a regulated way just because of the main issue of the AI agent kind of hallucinating all over the place for the same audit. So we have started it, but not engaged it thoroughly just because we need an vetting of an human intervention to have a proper response through it. But as in same goes with analytics as well. For data gathering, we have done it, but we have to restrict it to our institutional clients just because we have to audit the report and structure from where the data is coming through. If it comes through a bad source and AI takes it, then we have to anyway lose all the data out. So we are going in a cautious way ahead where it does not affect our credibility of the source of data and does not affect the credibility of the service that we provide.
Okay, sir. So can you also tell me, what has been the direct impact of recent SEBI regulations on derivatives volumes, profitability, and client activity?
Which part? Hello.
Ma'am, please repeat your question.
Yeah.
What has been the direct impact of recent SEBI regulations on derivative volumes, profitability, and client activity?
That it is from the recent circular, we think there is a short term, there is a impact on our volume, but we think it is a good for the overall market condition in long term, because the retail traders who lost their money in short term trading, they save the money and they invest So the fundamental base of the investor will improve. Short term, definitely it was affected in a volume of the business. Hello?
Yes.
Hello?
Hello. Yes, sir.
Ah.
And last thing is like, what is the revenue and EBITDA and PAT growth outlook for FY27? And what are the key business drivers expected to support this growth guidance?
We expect around 20% growth in brokerage and the clientele, and around 20 to 25% growth in the algo trading and delta hedging income.
Okay, sir. Thank you so much. I'll join the join the queue.
Thank you. The next question is from Dhanraj Tulani from Kuber Advisors. Please go ahead.
Hello?
Yes, sir. Please speak a little bit louder. Mr. Dhanraj?
Yeah. Yes. Yes, sir. Thank you, sir, for the opportunity. So I have a couple of questions. I'll just start with the first one. I just wanted to know on the customer acquisition cost, which is, you can say, the key metric in broking. So what are the current CAC trends for digitally acquired clients versus traditional relationship-driven acquisition? Hello?
So for acquiring the digital client out, we have made an eKYC platform directly to a third-party vendor that caters through opening accounts. There, the cost of account opening comes around to 60 to 70 rupees per account. But overall cost is around 500, given all the stamp paper and all the due diligence that we have to go through. So that is one. Other than that, we have not yet started with digital marketing just because we are still tapping the network of clients that we have till now and the second generation of those clients. After we are done calling through and acquiring them, then we'll start a digital marketing campaign.
Okay. And what percentage of new client additions now result from digital onboarding channel?
Like 100% is done through for retail clients. Only regulation that goes through is we can't acquire HUF, that is non-individual accounts. HUF, your private limited companies, partnership companies, that we can't do it online. We have to do it through a physical form. So those are done. Baki 100% of it done through digital platform.
Got it. And if I'm not mistaken, so we have client base of around 23,000 plus clients. How many of our monthly active trading clients generating brokerage revenues?
Around 8 to 9,000. Actually, we have customer of the 25,000, and active means they do the Soda quarterly basis we calculate is around 10 to 12,000.
Okay.
And most active means daily trade is around 2,000 clients, 2,500. They do the daily trading.
Okay, got it. And how does the retention profile of digitally acquired clients compare with the legacy relationship based?
So since it is a relationship-based account, the retention is almost 100% out. We have not yet faced any client kind of saying that they want to close an account. Maybe due to retirement or so, we have 2-3 clients right now. They are kind of closing the account and just want to pull out from the whole system. But other than that, the retention is 100%. Just because they are from the relationship that we have built through the years.
And for specifically for digitally acquired clients? So what is the...
So again, repeating it, we have not yet started a digital marketing campaign. For forms that are opening through digital media or platform, that is happening through relationship that we have personal with the clients, existing clients.
Okay, got it. And one last question from my side. So, what percentage of trading volumes are currently executed through the platform, through our platform, versus assisted execution?
That figure is not worked out.
We'll have to calculate it through. We might get back to you, like you could email it to us. We'll calculate that and get back to you on this.
Okay, sure.
Thank you. Participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from Priya Jain from Green Capital. Please go ahead.
Hello, am I audible?
Yes, you are audible.
Yes, sir. I remember interacting you last quarter as well. Few things I need to understand. That how are we differentiating ourselves and competing effectively against large discount broker, and this sector is like this whole industry is extremely competitive, and how competitively you are operating with significantly higher scale, lower pricing, and much larger technology and marketing budget.
So let's say right now that we have not yet started the digital marketing itself, but think about this as a perspective that we charge the same brokerage as the discount brokers that are there. Plus, we give a personal touch of dealers that are associated with us. So we have a human connection that goes through. And I think somewhere that human connection follows through as a USP for us right now. So that gives a competitive advantage. Other than that, we almost define every services that is given through every broker out. So we provide that. And basically right now it is a market itself. So acquisition happens on relationship, at least in India, that we have seen. So we have a huge network out for the clients that are there. So we are kind of cultivating it.
Sir, but don't you think that to cater this new generation, the Gen Z, which is a lot in population, don't you think to attract them, digital marketing is actually needed? It is a need.
It is. Yeah, that is needed. That is needed.
The companies with grow and zero down, who are very good with marketing.
Yeah, and that is true. That is very true. It is needed out. But so we are on the same words that somewhere we need to kind of make the platform like seamless enough. So we have almost kind of getting it done within this quarter itself, and we'll start the digital marketing like after this quarter itself.
Also, what is the branch expansion rollout strategy if we, let's say, for the next 2-3 years, and which geographies are being prioritized for scaling?
The branch expansion we expect not much, but every year about 8 to 10 branch or franchises. Say it is not exactly branch. It is
Yes, correct.
10 to 12 branch every year minimum we want to start, because in a branch expansion there is a very risky proposal, because nowadays there is a compliance is much more harder in a branch environment, because whatever the branch manager or the sub-broker is promised to his client, that we have to risk for that promises, and so the expansion in a branch network is a very risky business. So we will more cautious, and we will start slowly.
Okay, is there any revenue guidance for FY27-28?
Uh, 27, no? March 27.
Yes. And a year after 27 or so, let's say for 28. Like next 2 years. I'm asking.
March 27, it is a full year around 40 crores.
Okay. Okay. Any new things which you are going to launch, or any new thing which is in pipeline which you are working on and you can announce it right now?
No.
Okay, sir. Look, all the best. That is from my side. We'll come back in the queue. Thank you.
Thank you.
Thank you. The next question is from Aniket Badwani from StepTrade Capital. Please go ahead.
Hello, I'm audible.
Yes, sir.
Yeah, I just wanted to understand the expenses that have been increased in this quarter. So, could you just highlight the expenses that have been increased and the margins have been contracted with this quarter? So,
No, it's not. The expenses are increasing. This half year.
yes.
Which expenses?
So here I can see the this one and two of the other expenses and also the purchase of equipment. I mean, could you explain for which segment these purchases are made?
So this half year is not.
For this half, H2 FY26.
Could you specify the specific entry that you are looking at?
I'm asking for the purchase of stock in trade. I mean, for which segment these purchases are made?
Other expenses.
Sorry, what purchase are you talking about?
I'm talking about the purchase of stock in trade.
17.
I'm not able to hear clearly. Could you repeat that?
Hello.
Yeah.
Mr. Aniket, please be a little bit louder.
So I'm asking about the purchase of stock in trade.
Stock in trade. Okay.
Stock in trade.
Okay.
Yes, yes.
In stock in trade, purchase is increased. It's a trading activity. So there is a
Sorry?
last year in trading activities we showed half year as a investment and half year is as a trading activity. So the last year figure is not comparable.
Could you just repeat?
We have changed the accounting system since October 2024. Up to October 2024, we have shown as a investment. So it was not included in the purchase for the financial year 24-25 for the half year. And next half year, we have shown this turnover as a turnover, as a purchases. So that figure is not comparable.
So the investments made in last year, so they have been shown in this half, as we have changed the accounting standard.
आप मुझे ईमेल पर्टिकुलरली करके दे दें, मैं आपको राइटिंग में ही रिप्लाई दे दूंगा.
Sorry?
You give me your queries by email. I will give it to you in writing.
So I mean, I just wanted to understand the sudden jump in the revenue. If you could just highlight.
From which revenue sudden jump in?
Hello?
Which had sudden jump in revenue? Revenue from operation.
Sir, I think Mr. Aniket is disconnected right now. Okay, so ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Parth Acharya from Kirin Advisors. Over to you, sir.
Thank you everyone for joining the conference call of Rikhav Securities Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference call.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everybody.
Thank you, sir.